dividend yield also follows the stock price as well. If the stock price goes higher or their earnings also would go higher, the dividend yield would also in proportion to that as well, especially if they keep on increasing the dividends that they give out. So please remember, if they increase the dividends that they pay out, the dividend yield would become lower and people would start buying it, hence increasing the stock price as well. This video, I want to give you 10 reasons on why dividend investing is amazing, especially if you're the type of person that wants to invest in the stock market passively. You want cash flow and you're in it for the long term. Also, do remember that dividends is basically based on the company's income. It's surplus already of the company. So isn't that a very, very good scenario that you're investing in a company that they have more than enough to pay for their operations and their expansion as well, and they have something that they can reward shareholders with. So I'm going to give you 10 reasons on why I like it, and I do hope that after this you start trying to get a bigger understanding about it and you start researching it on your own as well. Because what will give you conviction over this is that you're doing something based on something that you've taken the time to learn and understand as well. Number one is this: dividend investing is good for those that want to get income generation, especially if you're either retired or you want it as a source of income for you that you can use to spend on your daily, monthly, and yearly needs as well. This is amazing because you get a regular amount of money regardless if the market is bullish, very, very high, everyone's excited, or the market is bearish, everything's down, everyone's pessimistic. You get that regular cash flow that's coming your way. Number two is this: for long-term growth, companies that give good dividends are normally either established, mature, and they're doing very, very well already. That's why they can give out dividends. A lot of these dividend companies can give you a good rate of return also, especially if they continue to earn more, profits continue to grow, and also the dividends that they're giving out on a regular basis would also continue to go up. Dividend yield also follows the stock price as well. If the stock price goes higher or their earnings also would go higher, the dividend yield would also in proportion to that as well, especially if they keep on increasing the dividends that they give out. So please remember, if they increase the dividends that they pay out, the dividend yield would become lower and people would start buying it, hence increasing the stock price as well. Number three is lower risk. Companies that give good dividends normally are less volatile and less speculative as compared to other companies that don't give dividends at all. Please do remember this, that for companies that don't have dividends, people only buy them for the context of capital appreciation, which also could pretty much be driven by disclosures. But companies that give out dividends, investors could be patient even if for certain periods the stock price does not do well or it does not actually move, because as long as they own the stock, the dividends will still be coming their way. Comparing stocks that not giving out dividends versus stocks that give out dividends, the ones that give out dividends are less speculative, are less volatile as well, because there's a bunch of holders buying it, not really just to flip it, but they want the reward of the cash flow that the company is actually giving out. Number four is dividend growth. The great companies increase the dividends that they give out on a yearly basis. And if you're a passive investor, what's nice about that is even if inflation is going higher, even if inflation is increasing, if the pace of how they increase their dividends is even higher and better than inflation, or the dividend yield that you would get also would be higher because they keep on increasing the dividend payouts that they give you, then that's something that's worth looking into. And I think that's nice as compared to companies that the dividends that they're giving out is flat and the same almost every year. If you find companies that are increasing the dividends that they're giving you, then your yield also would increase every year, which makes dividend investing very, very amazing. Next one is diversification. So what's nice about dividend investing is that you can buy different stocks spread across different sectors. You are not exposed just to one industry or one sector, because there are a lot of companies that give you dividends that are in different geographical locations and also in different industries and sectors as well. So even if you're looking at it, for example, in the US markets, you could actually go for Coca-Cola, which has been very, very consistent in giving out its dividends. Or you can also look at Apple, which is also in the US markets. However, they're in the tech sector. Both of them are amazing brands. You get dividends from both, but because they're in different sectors, you also get diversification. You should also be intentional in the way you buy those dividend stocks by actually diversifying into different sectors and industries that give you high dividend yields as well. Next reason is value investing. A lot of the dividend companies normally are value oriented more than growth oriented. What does this mean? It could help you also potentially identify companies that are undervalued that have better long-term capital growth as well. So always remember this, that companies that are into growth, what they normally do is majority of the earnings, majority of the cash that they have, they would put it in for expansion to make the company grow bigger. So think about the supermarket that's expanding rapidly. Instead of giving out dividends, they're gonna put it back and build more supermarkets for them to continually expand. Next is this. Dividend investing can give you the ability to plan for regular cash flow. So there are some stocks that give out dividends on a quarterly basis. There are some stocks that give out dividends on a biannual basis. There are some companies that give out dividends on a annual basis. And what's nice about that is you can already project how much you could actually get. It gives you a level of predictability if you're focusing on dividend stocks. Unlike just purely capital appreciation, you don't know what the price will be 10 months from now, 10 years from now, so on and so forth. But for dividend investing, you have a particular price that you could get that's fixed on a regular basis, which can help you predict what you could actually spend on. Next thing that I like about dividends is its tax benefits. So dividends give you a lower tax rate. So like for the Philippines, every time you receive your dividends, it's already 10% withholded already to you. Comparing that to say time deposits where they withhold 20%, comparing that also to bonds where they withhold 20%, the taxes that you would have to pay off for dividends is much lower at 10%. One thing that I like about it also is that it's already withheld, meaning all of the documentation, all of the hassle that instead of you filing it yourself, as you got that income, it's already paid for and deducted from you as well. So it's very seamless, but not just that, the tax fees that you're paying is lower. Next is the shareholder reward. So since companies are rewarding their investors by giving them dividends, it helps develop also a long-term relationship between the company and the investors as well. As compared to those who are in it to just flip it or in it for the short term, they fail to not just spend a lot of time learning more about it, but they also fail to build relationships with the company or the stock that they're also investing on for the long term. So the longer you hold on to it, you get to also come and join annual stockholder meetings, and that's where you meet the people behind the company. That's where you get the direction of the company as well. So we got a dessert. What do you call it?
No, the dessert is
A pastry?
one of the oldest pastry shops here. You must try. So I asked what their bestseller was. It's called the Mea Lua. It's like a half moon.
Guys, what a quick break from the tips that we're giving you. And lastly, historical performance. Companies that give out dividends normally tend to perform better over the long term as compared to stocks that don't give dividends. And a logic that people could look at also when you're looking at dividend stocks versus non-dividend stocks, if you buy non-dividend stocks, if you hold on to it and they don't perform well, you don't get anything. However, dividend stocks, even if they don't perform well or the stock drops, you get rewarded with the dividends. And if you get rewarded with the dividends, what's interesting about that is this: when it goes down, the dividend yield also goes higher because lower prices, assuming that the dividend stays the same, you would get a higher dividend yield. And since the price would drop and then the dividend yield would be higher, then you would see more people start to pick it up as well. You would see more people come in and buy it at a lower price. And I think what's interesting about that also from an institutional standpoint is that more institutions would pick up stocks that give dividends, especially if they're low, especially if the dividend yield would be higher and attractive already, versus stocks that don't really give out dividends. There's a lot of advantages on why dividend investing works, but for me, it's really the fact that it's passive income for life. It gives you the ability to predict what you can get on a regular basis, and it's something that you know you're investing in a company that's fundamentally sound because they're actually earning. We always talk about this in the stock market, that you look for companies that are earning, and dividend stocks have the advantage because they're not just earning, but they have extra, they have surplus to fund whatever growth they need, to fund their operations, but also they have extra also, so they can return and give some value also to shareholders. So I've made hundreds of videos about the stock market. They're down in the links below. If you want to learn more how you can invest in stocks, I have links down below also on the stock market seminars that I have. I also have links below also on the books that I've written about the stock market. And if you guys have any questions about dividends, one of my favorite investing strategies, put them down below. I'm going to make videos about that for all of you, and I'm going to do my best to add as much value to you guys as possible. So I guess that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon. God bless you all. My wife entered here. This is an interesting H&M store. Looks very, very old, as you can see from the outside. But when you start to enter in, kind of looks modern. Again, similar to what we have in most countries. So, very, very modern H&M. What's interesting about this H&M, I think it's different floors because it's quite high. As you can see right there, it's super, super high. So, that's it guys. More videos coming out soon.